7 years ago, Saudi Arabia unveiled Vision 2030, a social and economic transformation program unprecedented in depth and scope, designed to end the kingdom's reliance on oil. At the halfway point of the program, Saudi Arabia's economy is booming, somewhat ironically, due to elevated oil prices. The country was the best performing economy in the G20 in 2022 and is set to be the bloc's best performing economy outside Asia this year. Beyond the headline growth figures, there are growing signs that the country's diversification efforts are starting to bear fruit, a message that came over loud and clear during my recent visit to Riyadh.
But I think what's been, to some extent, more interesting has been the non-oil economy. It seems to have been developing quite a bit of resilience, and we've seen 4 or 5% growth rates there now for a couple of years, and it's starting to look as if the Vision 2030 program is kind of paying some dividends in a number of areas, and is kind of making the non-oil economy a little bit more resilient.
Notable milestones for the wider economy include female participation in the workforce, which has doubled to 36% since 2016. Wider unemployment has fallen from 12% to 8% over the same period. Yet there is still much work that needs to be done. Private sector growth remains muted, foreign direct investment is significantly below the government's ambitious targets, and the non-oil economy is arguably still largely reliant on the oil sector. As the economy booms, Saudi Arabia's banks have reaped the benefit, with profitability metrics exceeding pre-pandemic levels in 2022. Lenders have particularly benefited from the country's booming mortgage market, a byproduct of Vision 2030, which has seen loans and advances post double-digit growth for several years. Growth is set to slow this year as the mortgage market cools and overall economic growth flattens after 2022's watershed year. Banks are confident, though, that major development projects, including futuristic city Neom, sports and entertainment centre Qiddiya, and real estate megaproject Murabba, will continue to underpin corporate lending for some time to come.
So we think growth will be steady, and that means the finance sector should still be seeing pretty strong loan demand in around high single digits, which is a little bit slower than last year, which was low double-digit growth, but still pretty good. And as you said, the fundamentals here are better than just about anywhere.
To read more about the outlook for Saudi Arabia's banking sector, including updates on open banking, CBDCs, and digital-only banks, visit thebanker.com.